joining me right now, Hatem Dhiab, Managing Partner, Gerber, Kawasaki Wealth and Investment Management, and Kenneth Leon, Global Director, Industry and Equity Research at CFRA. Good to see you both. So let's talk about Paramount. You're thinking hold here. What are you looking for?
So for Paramount, it's 1 quarter after Top Gun Maverick, staggering 1.8 billion of revenue. And Paramount is principally TV and film and trying to get to break even in profitability in streaming. That's a tall order. Their target is 2024. I think if it follows the playbook, particularly of Disney and what we expect with Warner Brothers Discovery, Paramount's probably going to have some kind of new cost initiatives so that they can really get to profitability and also to higher free cash flow. That's what investors want to hear.
Right, understood. And I mean, there's no doubt the landscape and the battle for eyes is real. Hatem, do you have some skepticism here?
Hey, Nicole, thank you for having me again. Yes, we do. I think longer term, first of all, it's really tough to repeat what Top Gun has done for Paramount. But I think longer term, they're really kind of competing with Netflix and Disney, who are spending a lot of money on content. And Paramount, despite being such a big brand in Hollywood, I don't think is going to be able to keep up. And plus, they have some structural issues with the fact that cord cutting is a trend that is just accelerating, and the average age of the viewer is getting older. So as a result, I think this decline, the structural decline, is going to continue. So not really interesting for us at this point.
Interesting. So, and because when you're watching regular television, you get these promos for Paramount. And so if you have cable, that's your point, Hatem, is that if you have cable, you watch Paramount, right?
Correct. There's a lot of affiliate revenue that gets to Paramount through that. And that's just going down. So I think Paramount is going to struggle to sustain some of that revenue. And also advertising revenue, which is, is going down too. So you got all these issues happening for them.
Yeah. Let's talk about some of the numbers. I mean, Ken, when you look at Paramount and it's trying to get more eyeballs while they have the competitors of the likes of Disney, where you have a buy rating, Ken, I know that. Netflix would be a big competitor too. What are you thinking?
So for Paramount, they added 4.2 million subscribers last quarter. Probably a healthy 3 to 5 million this quarter will be fine. And again, it's going to be much more to making money and getting higher average revenue per subscriber. But for Paramount, the majority of their revenues comes from CBS, and it comes from affiliate TV stations, and also their network with Showtime, Comedy Central. So if it's like Fox, which had very good results, we could see a surprise on the upside coming from advertising revenue and affiliate revenue, which then would kind of downsize the risk they have with streaming because it's a new business for them, but their primary contributions are coming from the legacy areas. And the stock's up today. Why do you think that is, Nicole?
Yeah, I think it's interesting. And by the way, you had a buy rating on Netflix too, which I mentioned. Good points there, Ken. Hatem, is there anything that Paramount could do differently to grow profitability? We see, Netflix changing ad tiers, and, there's a lot of spending that's going on original content. Is there something Paramount could be doing differently, or are you really just moving forward and focusing on the other names? And if so, just sort of forgetting Hatem and forgetting Paramount and just looking at the others as serious buys?
I mean, arguably, they started late with the streaming, but that's really the strategy going forward, was going direct to consumer. Yeah. So I think they just need to kind of keep doing that. And, as Ken said, 5 million subs a quarter will be very good, so they can actually start making up for some of the revenue that's lost from their affiliate and advertising revenue. But then two, sports, they signed a $1.5 billion deal with the Champions League, which is the European club league that is basically the premier soccer, football, European football kind of tournament. And I think that's really going to bring in a lot of new viewers, and it's really kind of property that is going to draw a lot of people just to sign up for the service. So I think spending money on these unique properties will be very good, and then executing on the streaming stuff.
Yeah. Well, how about Prime, Amazon Prime on Thursday nights? That's where you were watching football, Hatem. I mean, sports is a big deal, is a big important draw, right?
Absolutely. I think everyone is looking at how sports are gonna be used through each one of the streamers, right? You got Amazon, who's already went in, Apple, but MLS rights. They also have some baseball rights. So I think that's going to be the next frontier for all streamers, because we know that sports is what draws people. The Super Bowl had basically the biggest numbers we've seen in history.
Yeah. Ken, let me ask you this. I mean, we've heard about a big restructuring plan. Bob Iger brings us that from Disney. Nelson Peltz backs off. He said, look, they're doing everything we wanted. So pretty happy about that. Is that a good plan? I know you have a buy rating on Disney. At the same time, you have a sell rating on Roku. Just a quick thought on each of those, Ken.
Yeah, before we leave Paramount, I think the key takeaway is Mission Impossible with Tom Cruise. That might be the revenue that they need. So for Disney, it's about execution. There's been so much vetted out there in the marketplace on the new initiatives, Nelson Peltz, and just going back to what they're really good at. And I think that's a powerful theme for this group, which is be careful where you spend money on programming and production, and general entertainment, whether it be in pay TV or streaming, can sometimes not be where you should be. And Disney's going back to what it does great, which is all of its world-class brands to build movie production and content. I think for Roku, and there's so many kind of frothy, low-quality consumer discretionary stocks doing well today. So we'll see what happens with Roku after the close. It's obviously a second-tier player, both from the standpoint of subscriptions and now going into their own smart TVs. And they're much more sensitive to advertising. The spot rate market is abysmal, and that's the majority of Roku's revenues. So the surprise on the upside, or the bull case, could be a cost-cutting initiative. They have no debt, and they got $2 billion in cash, but we have a sell on the stock.
Right. And I know, Hatem, we're out of time, but you talked about the ownership and the management structure after the passing of Sumner Redstone, and how you just think there's been a lot of mismanagement as well when it comes to Paramount. So another topic, too, for people to discuss. Thank you both so much. Wonderful to see you, Hatem Dhiab and Kenneth Leon. Thank you.